In today's video, we are talking about entrepreneur relief. Now, entrepreneur relief is examined a lot in ATX paper. Okay. Now, basically, first of all, whenever any relief is available, so there are few conditions attached. Okay, so if those conditions are fulfilled, then only the relief will be available. So even for the entrepreneur relief, we have few conditions. So if I fulfill those conditions, then only the relief will be available. So first of all, we need to look at the conditions. We need to know what are the conditions. And then later on, we will see that how this relief will work. Okay. So let us quickly look at the conditions for ER relief. Now, basically, ER relief is available on gain on disposal of assets or shares. Okay, so it is available on assets and shares if certain terms and conditions are fulfilled. Now, if I talk about assets, so in case of assets, ER relief will only be available if it is a business use asset. Okay, if it is a business use asset. So it means this relief is only available on business assets. Okay, it is not available on any non-business asset. Like let's suppose, let's take an example. Let's say I have sold a whole business. So there will be many assets in it, right? Like there might be some property, plant and equipment. There might be a goodwill. Okay, and it can even include an investment property. So remember one thing, that investment property is not a business asset. It is a non-business asset. So ER relief will only be available on business assets. It is not available on any non-business assets. In fact, all the reliefs are only available on business asset. Okay, and those business assets, it will not include your investment property. Okay, then secondly, it will not include any stock. Okay, if you're selling a stock, so that will not result in chargeable gain. Okay, that is basically a trading income. Okay, so first of all, it should be a non-current asset, and secondly, it should be a business asset. So like I said, that on stock, uh, if I sell the stock, so that will not result in any capital gain, because that is your trading income. Okay, because firstly you need to see that whether that, if I'm selling something, so whether that will result in capital gain or will it be treated as a trading income. Okay, so stock, sale of stock, that is your trading income. That is not a capital gain. That will not result in any capital gain. So first of all, it should be a non-current asset. Secondly, it should be a business asset. Okay, so it will not include any investment property. Okay, so ER relief, that is only available on business assets. All right, now let's suppose I have seized my business, I have seized a trade. Okay, so now obviously I will sell the assets, right? I will sell my business assets. So on sale of business assets, if there is a gain, so on that gain you will receive ER relief. But for that, it says that you need to sold it within 3 years of cessation. Okay, so when business is seized, the rule says that asset must be sold within 3 years of cessation. Okay, so either it will be sold as an ongoing business, right? Or it will be, or I will seize my trade and then I will sell it, right? There are only two ways of selling your business, right? It could be the case that maybe I'm selling a going concern business, which is the first case, right? Which is the first condition, that disposal of going concern business. Okay, I'm selling a running business. Okay, and this business could include a sole trader business, or it could even include a partnership business. So if I'm selling an ongoing business, if I'm selling a going concern business, so even on that, ER relief will be available. Then secondly, it could also be the case that my business is seized. So the rule is that assets must be sold within 3 years of cessation. Okay. So even then you will receive the ER relief. So either you will sell it, you will sell an ongoing business, or I will seize my business and then sell it. Okay. And what is the third condition? The third condition is that ownership should be more than 12 months. Okay, ownership should be more than 12 months. Okay, so ER relief that will only be available if the ownership is more than 12 months. Okay, by 12 months ownership period, I mean the ownership of business. Okay, I don't mean the ownership of individual asset. Okay, like for example, let's suppose I have seized my business and my business assets are sold. Okay, now I was having a total of 4 business assets. Okay, and 3 of my business assets were owned for more than 12 months. And 1 business asset was owned for less than 12 months. So the question is, will it be eligible for ER relief? The answer is yes. Why? Because you will not look at the life of individual asset. You need to look at the life of whole business. Okay, so by ownership, I mean the ownership of business, not the ownership of asset. Okay, so the ownership of business should be more than 12 months. Okay, then only you will be eligible for ER relief. Okay, so let's suppose if I have started my business, let's suppose 6 months ago. Okay, so if you are selling an ongoing business, so although that will result in chargeable gain, but ER really will not be available because ownership of business should be at least 1 year. I have just started it 6 months ago, and let's suppose now I'm selling it. So now ER really will not be available because for that you need to own the business for at least 1 year. Okay, 12 months. So that was the case of assets. So it is available on disposal of asset, but for that you need to meet these conditions. Then secondly, it is also available on shares. Okay, so it is even available in case of shares. So if I'm selling the shares, so that could result in chargeable gain, right? So even on that chargeable gain, you can receive ER relief. But for that, you need to meet certain conditions. Now, what are those conditions? So in case of shares, it says that the individual should be an employee of the company. Okay, then secondly, it should be a personal trading company. Personal trading company means where the holding of individual is 5% or more than 5%. Okay, the holding should be 5% or more than 5%. And like I said, that it should be a personal trading company. Okay, so it should be a trading company. It should not be an investment company, right? Because there are property investment companies as well. Okay, so it shouldn't be an investment company, it should be a trading company. Okay, because on investment company this relief is not available, it is only available for trading company. Okay, and lastly, the ownership of shares that should be more than 12 months. Okay, you need to own the shares for 12 months. Okay, so if I meet all of these conditions, then only I will receive ER relief on gain on disposal of shares. Okay. Okay, so we have looked at the conditions. Like I told you, that is available on assets and it is even available on shares. But you need to fulfill certain conditions for that. Okay, now let's suppose I have fulfilled the conditions. Okay, I have fulfilled the condition. So the question is, how will I receive the relief? How this ER relief works, right? Because right now we were just looking at the conditions. Now we need to see that what is the relief? How much relief will I receive? So remember one thing, that assets or shares, they will be assets or shares which are eligible for ER relief. They will be now taxed at a flat rate of 10%. Okay, they will be taxed at a rate of 10%. Okay, normally we pay the tax at 10% or 20%, right? So if you remember the slabs, so So from pound 1 till 37,500, we paid a tax at the rate of 10%. Then 37,501 and above, we pay tax at 20%, right? Okay. So that is a normal tax rate. Okay, 10 or 20%. But basically, we apply tax on capital gains in the end. So normally this first bend, your basic rate bend, that is already consumed. So by the time you will go and apply tax on capital gain, so you will pay tax at the rate of 20%, because by that time your first slab will already be consumed. Okay. So normally on the capital gain, we pay tax at 20%. But if I qualify for ER relief, if I fulfill those conditions, then I have to pay tax at the rate of 10%, not instead of 20. Okay, so that will result in a tax saving of 10% for you, because instead of 20, you will be paying 10%, right? So 10% will be my saving. So that is how you will receive the relief. Then secondly, it can be claimed on a lifetime amount of maximum 10 million. Okay. What is the maximum limit of gain? 10 million. Okay. You can only claim it on gain of up to 10 million. Now, this is a very big amount for a sole trader. Okay. Like, let's take an example. Let's say Mr. A started a business, and after some time he seized the business and sold all of his business assets. Okay. Now gain on disposal of asset was, let's say, 3 million. Okay. He sold those assets, and how much gain did he make? He made a gain of 3 million. So he claimed ER relief on this gain. Okay. He claimed ER relief on this gain. Now he can claim it, right? He can claim it on the entire amount, because just look at the limit. That is 10 million. That is the maximum limit of gain, right, on which you can claim the ER. Right now it is just 3 million, so obviously you can claim it over on the whole amount. Now let's suppose he started another business, and later on he seized that business as well, and he sold all the assets. Now the gain on disposal of asset, that was, let's suppose, 5 million. Okay, that was 5 million. So even on this he claimed 5 million. Okay, so previously he claimed ER relief on gain of 3 million. Now again he is claiming ER relief on gain of 8 million, because still there is some remaining space, right? So the total is 10 million. So out of 10, up till now he has claimed ER relief on gain of up to 8 million, right? So still it means from the limit still 2 million is remaining. Okay, so in the future, if let's suppose if he is having gain of more than 2 million, so maximum he can claim ER relief on 2 million, not more than 2 million, because that is a remaining limit, right? Because right now the limit is 10 million, and out of that he has already claimed, he has already used a limit of 8 million. So it means remaining is 2 million. So in the future, it means he can only claim ER relief on gain of 2 million, not more than 2 million, right? Okay. Okay, now next thing. Now in the question, there will be number of assets. I'm talking about the exam question. Okay, so in the exam question, there will be number of assets and number of shares. Okay, now maybe some of the shares are eligible for ER relief and some might not be eligible for ER relief, because in case of shares, you need to fulfill certain conditions, right? Like for example, what was the condition? That individual should be an employee of the company, right? So let's suppose Mr. X, he is having shares of two companies. So let's suppose he is an employee in one of the company where he is owning the shares. Okay, so it means there is a possibility that gain on sale of those shares, that will be eligible for ER relief, because he is an employee of that company, right? So if we fulfill all the other conditions, like the holding should be 5% or more than 5%, right? And the ownership, obviously the ownership condition, that should be 12 months. So if you fulfill all of those conditions, so now on gain on sale of those shares, that will be eligible for ER relief. Okay. But let's suppose he also have shares of another company, but he is not an employee of that company. Okay, so if I sell those shares and if there is a gain, so now that gain will not be eligible for ER relief. Okay, so he is having two shares. One is qualifying for ER relief and the other one is not qualifying for ER relief because he is not an employee of that company. Okay, so he will not be eligible for ER relief. Okay, so the point is that there might be some assets or some shares in the company. So out of those, some might be qualifying for ER relief and some might not be qualifying for ER relief because I have not fulfilled the conditions, right? So over here, what you have to do is, in the exam, you will be preparing two columns. You will make two columns. You will make one column of ER, okay, or let's say you will make one column of assets qualifying for ER relief, and you will make another column of assets not qualifying for ER relief. Okay, so what you have to do is you will just record the gains. Okay, so I will record the gain of assets qualifying for ER separately, and I will record the gain of assets not qualifying for ER separately. Okay, so I have recorded the gain. Okay, now what I have to do is I have to minus the annual exemption. So annual exemption is 12,000, and we all know that we only receive one annual exemption on total gains, right? Only one annual exemption in one tax year. Okay, and if I don't use that annual exemption, then it will be wasted. Okay, so I have the annual exemption. Okay, that is only available on total gain. So the question is, from where should I minus the annual exemption? Should I minus it from those assets, those gain which are qualifying for ER, or should I minus it from those gain which are not qualifying for ER? So basically over here, you should minus it from those gain which are not qualifying for ER first, right? Why? Because on these gain you will be paying tax at the rate of 20%, right? So obviously, if you as per your tax planning point, you should minus the forward from gains which are not qualifying for ER, because over there I'm paying more tax, so I should try to reduce my liability, right? So I should be minusing it first from those assets which are not qualifying for ER. And if some of it is still remaining, if some of the annual exemption is still remaining, so then it will be then you will minus it from gain which is qualifying for ER, right? So that should be your tax planning point. Okay. Now same goes for the capital losses. If there is any capital losses, okay. So capital loss, it should be first deducted from gain which is not qualifying for ER. And let's suppose if the capital loss amount is very big, okay, still some of it is remaining, so remaining one will be deducted from gain not which are qualifying for ER. Okay, so you can just net them off. That will give you with your taxable gain. Now on your taxable gain you will apply the tax rate, right? So for gain qualifying for ER, you will pay tax at the rate of 10%, right? And gain which are not qualifying for ER, so here you will pay tax at the rate of 20%, or it could be even 10% if the basic rate band is still available. Okay. Now, if I talk about the sequence of applying the tax, so remember one thing, that first of all, you have to pay tax on gain which is qualifying for ER relief. Okay, so this will be your first sequence for applying the tax. Then you will pay tax on gain which are not qualifying for ER relief. Okay, so remember one thing, that in case of gain which are qualifying for ER relief, on those gain, you will just directly apply the tax rate of 10% straight. Okay, there will not be any bend story over here. You don't have to look at the slabs limit over here. Whatever the gain is, you will simply apply the tax rate of 10% over here. Okay, so you don't have to look at the bend limit, whether any bend limit is available in the basic rate bend or not. No, you will simply apply tax at the rate of 10% on all the gain which are qualifying for AR. Okay, but remember one thing, that this will consume your bend limit. Okay, this will consume your bend limit. Okay, like let's suppose your basic rate bend that is still 37,500, right? Okay, so and let's suppose the gain which is qualifying for ER that is 30,000. Okay, so on this 30,000 you will straight apply the tax rate of 10%. But this 30,000, this will consume your bend limit. Okay, so firstly you will apply tax on gain which is qualifying for ER. Then you will apply tax on gain which is not qualifying for ER. Now, obviously, for this gain, you need to look at the slab limit. You need to look at the bend limit. Okay. Then accordingly, you will apply the tax either at 10% or 20%. Now let's look at a question. So question number 12, it says, Mr. A has following income. So the taxable non-saving income is 10,000. So this is taxable non-saving income. So it means the personal allowance is already deducted. So you don't have to minus it. Okay. Then taxable interest income that is 5,000. So again, it means that personal allowance is already deducted. Okay. Then it says the chargeable gain eligible for ER relief is 35,000 and chargeable gain not eligible for ER relief is 20,000. Now we have to calculate the tax. Okay, now when it comes to applying your tax rate, so we all know that first of all, we need to apply tax on non-saving income, then saving income, then dividend, and in the end, you will apply tax on capital gain. So in this question, I can see non-saving income and I can even see a saving income plus a chargeable gain. Okay, so we will apply the tax in sequence. So let's see. Okay, so firstly we will we are computing income tax. Okay, so we have non-saving income and saving income as well. So it means we have to draw a pro forma, right? So I will make one column of non-saving, one column of saving, and a total column. Okay, so firstly I will just record the incomes. Taxable income. So my taxable non-saving income that was 10,000. And saving income, your interest income is 5,000. So 10,000, 5,000. This will make a total of 15,000. Right? So they have already deducted the personal allowance. So there's no need to minus the personal allowance. Okay, now you will just go and straight away apply the tax. So we will apply the tax first on non-saving and then on saving income. So non-saving income. So my band limit, my basic rate band that is from £1 till 37,500 and we pay tax at the rate of 20%, right? Non-saving. Okay, so my non-saving is just 10,000. So whole of this can easily come in the first slab. So on this 10,000, I will pay tax at the rate of 20%. So that will give you 2,000. Okay, so I have applied tax on non-saving income. Now you will move towards your saving income. Saving income is 5,000, right? And if you look at the total income, that is 15,000. So from this, I can say that this individual is a basic rate taxpayer, right? Because your income is less than 37,500. Your taxable income is less than 37,500. So it means this individual is a basic rate taxpayer. So if he is a basic rate taxpayer, so on saving income, he will be receiving NRB, nil rate band of how much? 1,000, right? So although my saving income is 5,000, but I will be receiving an NRB of 1000. So NRB or saving income, that is 1000. So it means on the first 1000 I will pay tax at the rate of 0%. So that will make it 0. So my saving income was 5000, out of which I have applied tax on 1000. So my remaining saving income is 4000. Okay. Now this remaining saving income, this can easily come in the basic rate band because still there's a lot of space remaining. And my non-saving has just consumed 10,000. So still there is a space of 27,500. So this 4,000 can easily come in the basic rate band. So you will pay tax at the rate of 20%. That will make 800. So it means my income tax liability, that will be 2,800. Right? That is your income tax liability. Okay. So I have applied tax on non-saving and saving. Now I will apply tax on my capital gains. Okay, but if I talk about the basic rate band limit, so basic rate band, the limit is 37,500, out of which we have used 15,000 of the limit, right? 15,000 is already used by non-saving and saving income. So it means now the remaining limit of basic rate band is 22,500. Okay, so just remember this thing while applying the tax on your capital gains. Okay. Now let's see, look at the capital gain. So for capital gain, in the question we are given with gains which are qualifying for ER relief, that is 35,000, and there are certain gains which are not qualifying for ER relief, which is 20,000. Okay, so I told you that you have to make two columns for that, for the capital gain, right? So if you see that there are two type of gains, so in the exam you have to make two columns. I will make one column of not qualifying for ER relief, and I'm making another column of gains qualifying for ER relief. Okay, so chargeable gain. So not qualifying for ER relief, the gain is 20,000, and the gain which is qualifying for ER relief, that is 35,000. Okay, now we have to minus the annual exemption, right? Annual exemption, because we don't pay tax on capital gain, we pay tax on taxable gain. So annual exemption will be first deducted from gain not qualifying for ER, right? Because over there we pay more tax. So I will try to reduce my tax liability from here. So I will be deducting 12,000 from gain not qualifying for ER. So it means this has fully utilized my annual exemption. So gain qualifying for ER really will not receive any annual exemption, right? Because it is already used. Now we don't have any capital loss in the question, so I will just net them off. That will give you with your taxable gain. So this is going to be 8,000 and this will be 35,000. Okay, now we have to apply the tax. So like I told you that first of all, we need to apply tax on gains which are qualifying for ER, right? So it means first of all, I have to apply tax on this 35,000. Then I will apply tax on gain which is not qualifying for ER, which is 8,000. Okay, so gain qualifying for ER, that is 35,000. So if I talk about capital gain tax liability, so I would say that qualifying for ER will be first tax, right? Which is 35,000. So on this gain, you will you will pay tax at the rate of 10%. So that will make 3,500, right? But do remember one thing. I told you that this gain, this will basically use your band limit. So do you remember that my remaining band limit was, yes, it was 22,500, right? But don't you think that this band limit is already used by gain qualifying for ER? Because just look at the amount. That was 35,000 while the limit is 22,500. So it means this remaining limit is already used by gain qualifying for ER. So now there is no space remaining in basic rate band. Okay, so when I will apply text on gain not qualifying for ER, so I don't have any space in the basic rate band. That is already used. So gain not qualifying for ER, that is 8,000. But for this, we don't have any space in basic rate band. So it means on this 8,000, I will pay tax according to the second slab at the rate of 20%. So not qualifying for ER, 8,000 into 20%. So that will make 1,600. So it means my capital gain tax liability is 5,100. Let's look at another question. Question number 14. It says in the tax year 17-18, Kim sold her trading business, which was set up in 1997. Okay, so he sold her trading business, which was set up in 1997, to Martha and realized the following gain or losses. Okay, so he sold a business in 1780, which he set up in 1997. So can I say that 1 year ownership condition is already fulfilled, right? Business is owned for many years. Remember, there was that 1 year ownership condition, so that is fulfilled. Okay. All right. Now, realize the following gain and losses on factory, where there is a gain of 27 to 75,000. Now, remember one thing, that factory is a business asset. Then goodwill. Again, this is a business asset. So there's a gain of 330,000. Warehouse, again, this is a business asset. But over here, there is a loss of 100,000. Okay. And then can you see this investment property? This is a non-business asset and there is a gain of how much? 2,000. So I told you that ER relief is only available on business assets. It is not available on any non-business asset. So this is a non-business asset, right? This investment property is a non-business asset. So this will not qualify for ER relief. Okay. The first three assets, they will be qualifying for ER relief, but the last one will not qualify for ER relief. All right, then there is one more point over here. As you can see that out of these three business asset, on one business asset, which is your warehouse, there is a loss of 100,000, right? So what you have to do is you will set up this loss against the gain of business asset. Okay, what you have to do is you will set up the loss against the gain of business asset, and then on the net amount you will receive ER relief. Okay. Now, do remember one thing, that it could also be the case that maybe in the exam there is a loss on non-business asset. So remember one thing, that the loss of non-business asset cannot be set up against the gain of business asset. Okay. So loss of business asset can only be set up against the gain of business asset. It should be a business asset. Okay. All right, then it says all assets of the company has been owned for many years. All right. Okay. Now over here, I will simply make two columns, right? I will make one column of gain qualifying for ER and second column of gain not qualifying for ER, which is your investment property. And when it comes to annual exemption, so annual exemption will be first deducted from gain not qualifying for ER, which in the question is your investment property. Okay. All right, then it says that Kim also sold her shares. Remember, I told you that ER relief was also available on shares, but for that you need to fulfill some condition. Now, what were those conditions? That you need to be an employee of the company. It should be a trading company, a personal trading company, where holding should be 5% or more than 5%. And thirdly, the ownership of shares should be more than 12 months, right? So it says, let's see if those conditions are fulfilled or not. Kim also sold her shares in an unquoted trading company and realized a gain of 9.6 million. She owned 25% of the ordinary shares of the company, which she purchased 10 years ago. She has worked for the company on a part-time basis for the last 3 years. Okay, so first of all, she is an employee of the company. Okay, now both part-time and full-time employees will be counted. Okay, so it was not written over there that it is only available for part-time employee or full-time employee, right? It wasn't written. So it means it is available to all employees, whether it is part-time employee or a full-time employee. Okay, so number one, she is an employee of the company. Then number two, the holding is more than 5%. And number three, she has owned the shares for the last 3 years. So it means the ownership condition is also fulfilled, right? She has owned those shares for more than 12 months. So all the conditions are fulfilled, right? So it means that on gain on disposal of these shares, she will qualify for ER relief. All right, then it says that Kim has not made any other capital disposal in the tax year 1920. All right, so in the current year, he has not made any other disposal, but she has capital losses brought forward of 9,000. Okay, so there's a capital loss brought forward of 9,000. Okay, so brought forward loss that will be deducted from gain which is not qualifying for ER, right? First of all, you will minus this loss from gain which is not qualifying for ER. That is your tax planning, right? Okay, now why will I minus it, the brought forward loss from gain not qualifying for ER? Because basically over there the tax rate is very high. So I will try to save the text from there, right? So I will try to reduce the gain from gain not qualifying for ER. Okay. Alright, then it says she has never claimed any entrepreneur relief in the past. Her only source of income is a trading profit of 40,000. Okay. Calculate Kim's capital gain tax payable for the tax year 1920. Alright. Okay, so she has not claimed any ER in the past. So it means that none of the limit is utilized. Remember that there was a limit of 10 million. So none of them has been utilized in the past. Number one. Then number two, she is also having a trading profit of 40,000. Because when it comes to applying the tax, so you have to first apply tax on this trading profit. This is your non-saving income, right? Okay, then I will apply tax on capital gain. Okay, so although I have not been asked to compute income tax over here, we are just asked to compute capital gain tax. But still remember one thing, that this will consume my bend limit, right? This 40,000, this will consume my bend limit. So it is mentioned that this is a trading profit of 40,000. So this trading profit, this is first of all my non-saving income, right? And obviously from this 40,000, you will minus your personal allowance of 12,500. So it means my taxable income, that is going to be 27,500, right? Okay. So if I talk about your first bend, that is from pound 1 till 37,500. So it means out of this, 27,500 is already used by non-saving income. So what is the remaining limit of basic rate bend? That is 10,000, right? That is the remaining limit of basic rate bend. Okay, so it means when I will apply checks on capital gain, so remember one thing, that in the basic rate bend, there is only a space of 10,000 remaining. Okay, so I will be making two columns over here. Not qualifying for ER. And gain qualifying for ER. Okay, so not qualifying for ER. Over here you will include your investment property, right? So how much was the gain on investment property? Let's see. Yes, there was a gain of 200,000, right? So that will come over here. Now, apart from this, all of the assets were qualifying for ER relief, right? Like there was a sale of, if I talk about factory, so how much was the gain on sale of factory? That is your business asset, right? So that will qualify for ER. So that is 275,000. So that will go in the second column. Then we have goodwill. Gain is 330. Goodwill, the gain is 330,000. Okay, and then lastly we have warehouse, where there is a loss of 100,000. So warehouse will also qualify for ER, right? But there is a loss over here of 100,000. So you will set off against the gain of business assets. So let me just net this off. So we will be left with a net gain of 505,000. Okay. Now in the question we have one more thing, that is gain on sale of shares, right? And I told you that the gain on sale of shares, that will be qualifying for ER because we have fulfilled all the conditions. So for sale of shares, that will be qualifying for your ER relief. So how much was the gain on sale of shares? That was 96,000, right? So that was the gain. Okay, now the question is that will I receive ER on the entire gain of 9.6 million? The answer is no. Remember, there was a limit of how much? 10 million. Right? There was a limit of 10 million, right? Or let me just write down 10 million. Okay. So out of this, we have already used 505,000, right? That is already used by these assets. Okay, so it means that on the entire gain of shares, ER really will not be available because you need to look at the remaining limit, right? So out of this 10 million, we have already used 505,000. Okay, so the remaining limit is 9495,000, right? This is the remaining limit. Okay, while the gain is 9.6. So it means all the 9.6 cannot qualify for ER. Only this much can qualify, right? Only this amount can qualify for ER. So it means the remaining gain that will come in gain not qualifying for ER, right? That will go in the second column. Okay, so if I talk about this 96,000, so it means this will be divided into two. Okay, out of this 9495,000, this will qualify for ER, and the remaining gain, which will be 105,000, this will not qualify for ER, right? This will not qualify for ER, so this one will go in the first column. So let us just record it over here. So 105,000 was not qualifying for ER, right? Because of the limit. While 9495,000 will be qualifying for ER. All right. Okay, so if I just total them, so this is going to be 305,000 and this will be 10 million, right? Because maximum it is only available on gain of 10 million. Okay, now let us minus the capital loss brought forward, right? Because in the question there was a capital loss brought forward. So let us first minus the loss brought forward. Now, what was the amount of loss? That was 9,000, right? 9,000. So yeah, so we will first minus it from gain not qualifying for AR, right? That is your tax planning point. So all the loss is utilized, right? So it means that we don't have any loss remaining, which can be deducted from gain qualifying for AR column. All right, now I will minus the annual exemption. So annual exemption will again be first deducted from gain not qualifying for AR. So it's minus 12,000 from here, right? So it means over here, the gain qualifying for ER will not receive any annual exemption because it is already utilized. Okay, now just net them off. So that will give you with your taxable gain. This will remain 10 million, and this is going to be 284,000. Okay, now let us apply the tax. So firstly, we will apply tax on gain qualifying for ER. That means first of all, you need to apply tax on this 10 million. Then you will apply tax on gain not qualifying for ER. So on this entire 10 million, okay, you will pay tax at 10%. So qualifying gain. So on this entire 10 million, you will pay tax at the rate of 10%, which is going to be 1 million. Okay, now you will apply tax on gain not qualifying for ER, which is how much? 284,000. But can I say that now there is no space in the basic rate band? Okay, because I told you that there was still a space of 10,000 in the basic rate band, right? From here. But all of that has been used by gain qualifying for ER. Because that will use your band limit, right? So obviously the gain amount was very large, so it has used this remaining limit of 10,000. So it means there is no space in basic rate band. So on this gain of 284,000, you will pay tax at the rate of 20%. So into 20%. Now this is your non-qualifying gain. So this is going to be 56,800. So it means your capital gain tax liability will be 1,056,800. All right, so that was all we have from entrepreneur relief topic. Okay.